What's up, traders? Chris Capri here, SecondSkiesForex.com, where we change the way you think, trade, and perform. Today, I got another live price action trade for you on the FTSE100. This was a textbook breakout pullback setup, which I'm currently up about 120 points on, so a little over about 2.25, 2.5 R. What I'm going to do in today's video is explain my framework for how I chose this trade setup. I will share with you the trade setup location, why I chose that, along with my stop loss and take profit, so you can get an idea of how I trade. Now, just to verify, as you can see, this is a live account. This is the trade right here. I'm currently short at 75.45. The prices are moving in real time. This over here says CAD. If it was a demo account, it would say simulation, so you know I'm trading live with my own money. So let's go ahead and get into this trade. Just for the details, I'm short at 75.45. My stop loss is at 75.95, and my take profit is at 73.03. So let's look at the chart. Okay, so what I've done here is marked a line where my entry is at 75.40, 45.42. But what I want to do is briefly step back to the daily time frame and talk about kind of the structure and the framework for how I make my trades. So I mentioned in my last trade video, which was like a 500 pip winner. I'm actually still holding it on the euro dollar. And I talked about the framework. So the framework is the first thing I do before I decide anything in terms of what strategy I'm going to use is I go through a process of analyzing the price action context. And I do this through 3 pillars. And so we have 3 pillars that help us understand what is the underlying price action context. Is it bullish or bearish? Where is the imbalance between the bears and the bulls? Who's in control? Where's momentum? Key trading locations? Where institutional players getting in and out? So this is a framework I have. And once I've decided this, then I can know which strategies I want to use and which ones I don't. Now for this one, what I'd like to do is kind of mark this structure here. So you kind of see that there is this corrective structure that we had been in since May of last year. So Q2, Q3, Q4, all of last year, several months, we were kind of stuck between 72.25, 72.5, and 76. Towards December, though, we had a very bullish impulsive run. We broke out of it, just climbing. It went to about 78, and then the market started to sell off. Now, if the bulls were in control, then this area right here, these kind of spikes here and this kind of spikes here should act as some sort of support. But that's not what happened. In fact, you can kind of see impulsive corrective structure, and they just diced right through this here. So once we got back into the structure, I want to be short. That's, I want to, any bias I had long while above it is now gone. I want to be short. So the first thing I'm looking for is a break inside the structure, which we got. However, there is kind of, I've talked about in my last article how support and resistance is really more of a zone than a single line in the sand. And when you start to look at these peaks here, here, and here, you kind of see that, okay, this is kind of a support zone. So I really would want the market to kind of clear, this kind of zone before I look to get short. So that's what I was looking for. So zooming into the 1 hour chart, here is kind of that upper edge of that, or the bottom edge of that zone right there. And so what happened is once we got below that, we kind of went up into this and it started to sell off. And I should have gotten a little bit higher, but I was a little late to the party on this one here, morning my time. So by the time I got into it, that was it. But I'm short on this one here at 75.45. In terms of my stop loss placement, that was at 75.95, and that's roughly right about here. And so I always place my stop loss in a location where this is where the market should not go if my trade idea is valid. If it goes there, then it has invalidated my trade idea. So I simply, if you extend this out, you can see that I placed it pretty much at the top of this zone right here. I felt like the market should not go this high. And so that's where I put my stop loss location on that one there. So 50-point stop at 75.95. Currently we're up about, 115, so about 1 point, or we're up about 2.2 R at this point. In terms of my take profit location, Well, if this structure had held for a long period of time, then there's most likely going to be some technical players that are going to have some buying interest in these lower area, the lower part of this zone here. So I'm targeting the bottom of the zone. I'll probably start locking in some profit pretty shortly, but I'm anticipating that this will go towards the bottom of the zone. And so I want to be taking profit towards the bottom of the zone. So that's why I place my take profit there. If you like this video, make sure to give it a thumbs up along with share it with others, and make sure to leave a comment what you learned from this. Good luck trading, everyone, and I'll see you in the next video.